Welcome back, everyone. Let's look at our notes now. I'll just share the screen with you. Here you go. As you can see on your screen, EIS Enterprise Investment Scheme. Now, as I said to you in the previous video, I think this is very important from P6 exam point of view, and the examiner can ask you to do some commentary on that. Examiner may ask you to give someone, some investor, and advice on which scheme should he invest in. Say, for example, if he is a risk seeker, if he doesn't mind taking a risk, then you should go for SEIS, and he is also able to keep the shares for 3 years. All right, so you will have to consider that as well. All right, so let's look at EIS. Enterprise Investment Scheme is a scheme designed to promote high risk unlisted trading companies raise finance through the issue of ordinary shares to individual investors. So they want to raise the finance by issuing the shares to individual investors. Now, these investments are high risk because investments are made in unquoted companies which have less than 250 employees and gross assets of less than 16 million after investment. All right. That's what I mentioned, I think, on the board as well. Alright, then what is the tax relief? Tax relief is 30% of the qualifying investment. Remember, it can only reduce the tax liability to zero, but it cannot go into negative. The maximum qualifying investment is 1 million for the tax year 16-17. Now what happens is that although the maximum investment limit is 1 million in this tax year, which is tax year 16-17, now if you invest more than that, that will be treated to be invested in the previous tax year. All right, and the tax relief, tax reducer will also be given in the previous tax year. Now, if taxpayer wishes to invest in excess, then the investor may claim to have shares treated as issued in the previous tax year, which is 15-16, and claim tax reducer in the previous year. Withdrawal of income tax relief. Now, if you sell the shares within the minimum holding period, your income tax relief will be withdrawn. Now, if you sell the shares, if the disposal is not a bargain at arm's length, now what does this mean, bargain at arm's length? It means market price. Now, if it is not a bargain at arm's length, then the full amount of relief originally obtained is withdrawn. So if you do not sell at market price, all of the relief originally obtained will be withdrawn by HMRC. But if you sell at market value, then the tax relief withdrawn will be calculated as sales proceeds into 30%. Right? Because that was the percentage, 30%. So we'll take the sales proceeds, which will be market value, multiplied by 30%. All right? The next one is a CGT relief. You know, some of you do not know, might not know that what is capital gains tax, what is CGT. Now, CGT is just another type of tax, another type of capital tax, you can say, which we have to pay when we sell some assets, right? So when we sell some assets, we take sales, we take cost, so whatever the profit is, that is known as gain. So that is the amount on which we might have to pay capital gains tax. All right. Now we will also get CGT relief with Enterprise Investment Scheme. So how can we get this relief? It says CGT relief shall also be given where shares qualify for income tax relief under EIS. So where you will get EIS relief, you will also get SEIS relief. Where shares are disposed of after the 3 years period, any gain is exempt. Like in this case as well, in income tax, I showed you on the board, if you kept the shares for 3 years, then the income tax relief will not be withdrawn. All right. Likewise, in capital gains tax, if you kept the shares for 3 years, then the share disposed of after 3 years period, any gain is exempt from CGT. So you will not have to pay any capital gains tax. All right. Now, if the shares are disposed of within 3 years, any gain is computed in the normal way. Now, what is the normal way? We'll take the sales proceeds less cost, and that would be the gain. All right. If the shares are disposed of at a loss at any time, if you have sold the shares at a loss, now which shares? EIS shares. If you have sold the EIS shares at the loss, then what would happen is that although the loss is allowable, but the cost of the shares for calculation purposes, the loss is allowable, but the cost of the shares for calculation purposes is reduced by the amount of EIS relief given to shares. Alright, so what happens is that if you have sold the shares on the loss, then although the loss will be allowable, but the cost of the shares will be reduced by the EIS relief. Alright, you might not understand it very well when you will move to capital gains tax, when we will do the capital gains tax questions, and then you will have to come back to this section to understand it better. Then you will be able to understand it better. Alright, but you do not have to worry about it if you are struggling to understand this now. Alright, now let's move to next one, which is a seed enterprise investment scheme. Now it is also a unlisted company, and it is high risk company. Alright, and SEIS investments are high risk because investments are made in small sized unquoted companies which have less than 25 employees and gross assets of £200,000. Did I mention that? 25 or less employees, unlisted company, but I did not mention £200,000 or less than that are the gross assets. So please make sure you write that down as well. Alright, so gross assets are less than £200,000. The more points you get out of the notes, the more marks you will get. Alright, so whatever I have noted down on the board, each information will get you half mark. Say for example, if examiner wants you to write on EIS companies, now you will say these are unlisted companies, you will get half mark. They have less than 250 employees, another half mark. You're gonna say they will have less than 16 million gross assets, another half mark. You're gonna say they are high risk companies, then you will have to elaborate why they are high risk, then another half mark. Likewise, maximum investment will earn you half mark, benefit, minimum holding period. So every information you give to examiner, although the examiner knows what you are telling them, but examiner want to know if you know it. Alright, so you will have to tell them that you know it. Only then you can get the mark. Don't keep the information in your head. Alright, so let's move to our next area. What are the income tax relief on that? 50% income tax relief on the qualifying investments. Remember, tax reducer can only reduce the tax liability to zero, but it cannot change tax liability into negative. The maximum qualifying investment is £100,000 for current tax year, and if you want to invest more, it will be assumed to be invested in previous tax year, like in EIS, just like in EIS. And capital gains tax deferral relief, just leave it for now, you won't understand it better. I think we will come back when we do our capital gains tax. Now, withdrawal of income tax relief and capital gains tax relief, it applies, I mean the treatment is exactly the same which we have seen for EIS, and which I have explained in enough detail on the board. Just read through it if you want to. The next one is a venture capital trust. It is listed on London Stock Exchange that invest in small unquoted EIS type companies. To be HMRC approved, a VCT must satisfy certain conditions. The investment in VCT is moderately high risk investment. So it is not very high risk, it is moderately high risk, less risk, because it is listed on London Stock Exchange. Alright, I've listed less risky on the board. If you want to write down moderately risky, that is more sophisticated word. Examiner will like it. Please make sure you write down moderately risky, moderately high risk. All right. Right then, dividends received from VCT are tax-free, as I said, and withdrawal of tax relief will apply in the same way for EIS, SEIS and VCT. All right. Maximum qualifying investments, I told you how much. I told you on the board £300,000, whereas it says maximum qualifying investments are £200,000. Sorry for that. Just rectify on your notes. I am very weak on the memories. £200,000. All right. So maximum you can invest is £200,000. All right. Apart from that, everything is fine. Dividends are tax-free. CGT relief. CGT is exempt on the sale of VCT shares. Capital losses on sale of VCT shares are not allowable. And note that there is no minimum holding period. We will come back to this when we do the CGT, because you won't understand it better anyway. All right. Do not worry about it. We'll come back. That's it for this video, and we have finished our chapter number 2 as well. All right. Now we will start chapter number 3 soon, which is property income. All right. Now please make sure you buy BPP exam kit and start doing practice questions. We will do some questions during our lectures as well, and they are past exam papers. And because of the change in the tax year, because of the change in the way we deal with interest and dividends, questions become more complex, especially for those students who have appeared for this exam before as well, because the rules has been changed very much. So please make sure you buy latest BPP exam kit, or if you want to buy Kaplan, it's up to you. But we will go through BPP exam kit during our lessons, so that's why I would want you to buy the BPP exam kit. All right. So I can say to you that please open question number 30, whatever. All right. So that you should have that in front of you. All right. So we'll see property income in our next video. I think that is our next chapter. I think so. So we'll see property income in the next lecture. All right. Please make sure you start doing some questions as well. At the end of our session, I will also list down some major questions which you must have to attempt before you go to exam hall. And most of the questions which I will give you the list, most of the questions will be the ones which we will do during the course of our lectures. All right. So you do not have to worry about it. Just keep studying. Please make sure whatever I have written on the board, please make sure you write down on the board, even though that you might find some of the information in the notes as well. Please make sure you write down again whatever I have written on the board. All right. That's it for now, and I will see you in the next video with chapter number 3, which is property income. Till then, goodbye.